I'm very interested in what I call boring startups. It's like the old topic that are not very interesting, but that makes financial services work and function. And doing that a bit of the infrastructure layer, whether it's in insurance or payment or banking, there is a lot of opportunities in providing a modern infrastructure for people to build on that.
Welcome to the Tearsheet Podcast. I'm Zack Miller. Being an effective venture capital investor in fintech requires staying on top of consumer trends. Understanding the evolving nature of the end customer can make the difference when it comes to outsized returns. A little luck never hurts either. Yann Ranchere, partner at Anthemis, has been in the game a while and is paying particular interest to Generation Z and the investment opportunities that are arising out of serving this demographic. Yann joins us on the podcast to discuss why he likes investing in boring companies and where he finds these opportunities. We discuss Yann's current investments and the Anthemis Portfolio and where he's looking to invest over the next few years. Yann Ranchere is my guest today on the Tearsheet Podcast. Before we continue with our program, I'd like to thank our sponsor, MX, for supporting Tearsheet's work. MX is the leading data platform for banks, credit unions, and fintechs, enabling its clients and partners to easily collect, enhance, analyze, present, and act on financial data.
My name is Yann Ranchere. I'm a partner at Anthemis. I've been with the company since 2011. Anthemis is a financial services-focused venture fund, venture firm, and we invest in the US and Europe. We've been active since 2010, 2011 as a firm, having a portfolio now of about 90 plus companies in the space. My background, I'm come from a business background. I'm French. I worked before joining Anthemis as a strategy consultant in the financial services space in Europe, the US, and a little bit of the whole industry from retail banking to custody, fund administration, capital markets.
How was that transition, Yann, going from consultant to investor, like changing hats?
Yeah, I mean, it's quite I would say, interesting story. I was basically, I mean, the good thing about having that previous experience is, although I'm a specialist at nothing, I've seen a lot of universal bank. So having the ability to look at, every angle of a bank in a way or another was very insightful. And then, I've been involved on a personal capacity since the early days of what's called now fintech. I had the luck of being one of, part of the people that got interested in that space early on and got to meet a few interesting startups in the US, connected with the founders of Anthemis, and ended up joining the company.
And has that generalist perspective that made you, I assume, a good consultant, is that an asset in investing?
Yeah, I think it is. I think it is because just the ability to be able to understand the various layers at which a company operates. So I think it's one of the things that is quite specific to financial services is you always sit on top of what I would describe as a stack of either technology and balance sheet. And so you're always connected to the infrastructure level in a way or another. So understanding both from the consumer facing down to the deep, boring infrastructure is something that's always interesting to have and applicable in many ways.
91% of mobile banking users prefer using their app over going to a physical bank branch. But it's no longer enough just to offer an app. Customers demand a really good experience. That's where MX comes in. Its new mobile app, Helios, helps banks and credit unions stand out in today's world of mobile banking, going beyond simple transactions and account management. Does your mobile app get thousands of 5-star reviews? Does it increase your engagement and lead to higher brand loyalty and ROI? Check out Helios by MX at MX, that's the letters M and X.com. So from the infrastructure perspective, then just taking, I'd love to hear your opinion on, do you like investing in brands, like kind of full stack, or do you like more like infrastructure plays?
We invest in both. We try to be conscious of the cyclical aspect of things. So and so for the fund that we've been actively deploying, we've been actually doing a lot more B2B since 2016, because we thought there was a untapped opportunity in that space, and we've done more at the infrastructure level. But I think we might do things on the distribution level as well in the future when the timing seems better for us. But I personally am very interested in what I call boring startups. It's like the old topic that are not very interesting, but that makes financial services work and function. And doing that, a bit of the infrastructure layer, whether it's in insurance or payment or banking, there is a lot of opportunities in providing a modern infrastructure for people to build on top.
Can you give us some examples of those opportunities?
Sure. I mean, in Europe, obviously, in Europe, we've been investing we're investors in a company called TrueLayer. They provide the open banking API. The PSD2 platform, the PSD2 regulation has effectively pushed for open banking in Europe, both on reading account data, but also initiating payments. And so we think that's a fundamental layer for more businesses to be built on and existing businesses to leverage. So that's one example, but another example would be a company in the US called Trimar Technologies that's building effectively a programmatic marketplace for reinsurance risk. Again, like not very thin, but reinsurance is very interesting. The reinsurance market is trillions of dollars of exposure that's for the most part being traded on Excel, which is fundamentally crazy when you think about it. And so there is a lot of opportunities in making that more, I would say, capital market-like and having a better efficiency in moving capital around.
So going back to TrueLayer,
yep.
I guess when you approach like a big thematic sort of realm of investing, like PSD2, like open banking, the move to open banking, like do you take it at sort of like the thematic level and then move down to find companies there, or I guess what's your process for identifying opportunities and companies that are doing it well?
We are like to call ourselves thesis-driven investors. We have a broad set of thesis across financial services and in each of the subsectors in terms of where we think change is directionally happening and pockets of opportunities in that space. And then we like to search for companies there, but we're also, reflective on companies coming to us and adapting our thinking and going through that process. So open banking overall has been a long thesis for Anthemis. We like to define that as embedded finance. We think financial services are a key part of any functioning society and economy. It's like the nervous system. And so we're interested in to see how going forward, finance embeds itself in multiple experiences and kind of disappears in the background. And as part of that, the regulatory change of open banking really made it possible for these platforms that sit on top of bank accounts to exist. And so we were, very happy to have, the team at TrueLayer work with us and be able to take it from there with them.
So going back to that theme of embedded finance, it's also a theme we talk a lot about on the podcast and on our website. Can you talk about sort of what's driving that, where you think that plays out?
So in my view, there is like two main angles to that. One is the technology side of things, and that's, the ability for system to connect via APIs or kind of having this very easy connection layer between services and systems and organizations. And that's one of the drivers. And the other drivers is on the capital side, is this pocket of smart capital that's trying to allocate itself to the right place. And so you have, players that are on the capital side that are very interested in, whether it's lending, whether it's insurance to be the back end to those new platforms and have a new access to the market via these API layers. So I think for us, it's a mix of the two. It's understanding both the technology side of things, but also the capital side of things and how finance is evolving.
And do you see like a future where, every software provider, every SaaS has issued its own financial products?
What issued or distributed, I think for sure there is a future where people that provide both I mean, SaaS platforms can provide two things for financial services. They're an amazing distribution platforms. They have, deep connection to their customers and have, deep connection to some of their core problem. And they're also an amazing providers of data, and finance runs on data. So effectively, that's the combination that makes it very likely that these platforms will become either financial services themselves or will embed financial services in their experience.
Got it. And is blockchain underrated? Sorry, just to throw this at you. Underrated or overrated?
Hard to rate. That's a very bad answer.
Yeah.
But as my answer,
Yeah.
option C is blockchain is very hard to rate. This has the possibility of being very transformational. How I think long-term change, you can see the drivers behind blockchain, to use the word as a broad definition, and where it could go. And this is there are the same drivers, right? It's programmatic finance with certainty and a level of trust in systems versus organizations. How you reduce that into a short to medium change strategy or change outlook, that's the big question. So that's my answer to hard to rate. But definitely you can see just the pattern of things that are very interesting emerging.
And I want to shift gears a little bit. Most a lot of investors, a lot of analysts also focus on the consumer's relationship with money, particularly the millennial generation. And I know you've written recently about Gen Z, which is a bit younger. Can you talk about sort of what you found when you looked at how Gen Z approaches money, and B, I guess where the opportunities would be to service them in the future?
Yeah, I think it's one of the things that we're very interested in right now is two things. One is this really truly first digitally native generation and their relationship to money, and how it can be different from what we have. I think the example I use is that, I mean, as you know, and I'm going to age myself a little bit here, but I grew up like you received cash from your grandparents. That was pocket money, was cash, right? That was what you had. And you created a lot of reflex and patterns around that, how heavy your wallet was, how your relationship with money was, for the most part, when you were very young, driven by cash. And Gen Z is probably the first generation that doesn't really no attachment to cash or that perception of money. It's also the first generation that's really born into social media, or it's probably a bad word to use, but born into being digital first. And that sees the generation above aspirationally, the product they use are Venmo and other things. So it's easy to think that, everything that's wrong with the world is digital and they're going to be a lost generation because of that. I think the reality is much more measured, and they're much better active users of digital and leverage that in a more efficient way. And we're looking at all the patterns where they use digital and finance to try and have a more meaningful life, and how educated they are as customers into that. So we invested recently, for example, in a startup in Spain called Goin, that's looking to do micro savings for that generation. It's really, it's a generation that if they want to go somewhere fun in summer as a holiday, they need to start worrying about it in January, because savings is the only way they can get access to that. Credit is very limited. And how do you create an experience for them to save money, invest within their lifestyle, which is, having very low transactions. So, they launched something quite fun around, if you don't wake up on time, we're going to save 10 euros for you. And these kind of things that seems gimmicky, but when you attach it to the way people think and behave, then it's much more powerful.
Well, that's an interesting point. And I guess how are traditional financial services, or even fintech, are they going after Gen Z yet, or have they built products and services that sort of missed the mark?
No, my hypothesis is that it's actually a very much unserved population. Mm-hmm. Maybe Venmo in the US is really truly going after them. In Europe, very, very little. Most of the neobanks are targeting older and more wealthy. And then that's the rational choice, right? They're the ideal customers. The Gen Z is always considered as a bad customer because they have solid assets and not so great spending. But if you look on the other side of things, the biggest brand, the biggest emerging brand, the biggest emerging categories are driven by that generation. Online gaming, Fortnite, all these phenomena are driven by that generation. So there is a kind of a disconnect that we think is interesting to explore between the perception this is about a customer set and the fact that a lot of emerging very large companies are driven by that customer set. There's something lost there, and that's what we're very interested in exploring.
And what about challenger banks in general? From a business point of view and from an investment point of view, what's your view on sort of this evolution from sort of incumbents to this next generation of banking brands?
Yeah, I think you said it right. This is exactly that. This is the next generation of banking brands and a high emphasis on brands. They do provide a better service, but ultimately there will be service, or my personal view is there will be service parity among neobanks, and some of the smart traditional bank will also provide the same level of services. So it's really also a brand attachment, maybe not talked so much about, but they're creating new brands and new trust and new organization that people would identify with. And that's maybe one of the most interesting things about them that is not really looked at, or it doesn't seem so much looked at.
Right, because when they launched, they were competing on functionality.
Features.
Yeah, exactly. Yeah. Features.
They were competing on features like Revolut is, the FX bank. And they were in the beginning. And now most of the neobank have parity on FX with them for the most part, or even cheaper sometimes. So, but the brand is still attached to that. And I think that's the evolution in a way.
Well, in a way, and I was going to say this before when you talked about sort of embedded finance with banking as a service providers, as they get better, in a way, it almost ensures feature parity, right? Because you can have a good provider that's going to roll that out to all of its clients. And so,
and you look and you see that in banking,
branding.
Yeah, no, I don't think it's going to be all branding, but to your point, you see that we were lucky to be with Anthemis involved in Simple, and it took them almost 2.5 years to launch a new bank product, because so much was to be done on the infrastructure, convincing players how to do it, and basically figuring it out. And I was recently talking to a startup trying to launch an account for children, and their go-to-market was going to be 4 months from ideas to launching the card. And that's one of the things that I think will be very important also for neobanks, is you're going to see a lot of fragmentation and emerging players happening in the market that's going to target niche, whether it's like young children's, maybe specific social groups, maybe locations, and that platform infrastructure improvement almost guarantees certain set of feature parity.
And what's interesting is like you look at the Anthemis portfolio, and you have a lot of exposure to retail banking, consumer finance, as well as business banking. They're primarily European names. Like, I know you're active on both sides of the pond. Like, how do you compare the European and U.S. markets in terms of an investment destination?
The interesting thing is they are very dissimilar. They provide different set of opportunities. And part of the reason is all the regulatory environment in a way. Europe is an amazing regulatory environment for retail banking and other things, with passporting and payment, for example, with passporting, the ability to be regulated somewhere and deploy across and carry your license over. In many ways, on the consumer side, the US is a very difficult market. On payment, you need to register state by state. In insurance, it's the same. Even in banking, it's quite difficult to operate. Getting a bank license is very difficult, for example. But the other side of the story is, the US is a fantastic capital market, location with very clear guidelines and rules, a single market, very strong investment patterns and behaviors. And Europe is much more fragmented. Each countries have their own specificities, behaviors, and regulation. So there is definitely like an interesting thing in investing in both, is you get exposure to very different behaviors and different regulatory framework for companies.
So I think as we get to the end of our conversation, Jan, I'm curious to think like sort of what are the themes you're looking at now over the next, couple of years in terms of where you're thinking about, putting your money.
I mean, to give an example, I think a couple of things. We're still very excited about, new risk and new asset classes emerging with new information. So and that's a very broad category. But for example, we invested in a company called Rally Road in the US, and they offer securities into classic cars. So you can buy a piece of a Lamborghini Countach. This is a market that has been growing in valuation, and that's for them, that's really a first step. You have a lot of other different emerging asset classes that are now, you can now open to more broader set of users because you have more data to be able to track the assets, and you have the infrastructure to be able to provide a piece of them in the market. So that's one category that we're excited about because they're genuinely new data sets coming to market that allows these new behaviors.
And what do you think about exit potential in fintech? Like, payments, obviously, that we've seen sort of a vibrant sort of merger and acquisition market.
Yep.
Like, where do some of these companies go? Are they just are they intending to build large standalone businesses?
I think yes. I think there is going to be a mix of everything, acquisition, but clearly some companies now have reached a stage where, I mean, emerging as an IPO is probably the path for them. In financial services, that definitely viable. A lot of these companies we've seen in payment, they're very well-known business models that are easy to understand, create meaningful revenue very early on, and you can drive them toward there. The big question mark is what move the big tech players are going to make in that space. And coming back to our initial discussion around SaaS players, becoming more and more involved in financial services, the question is, what will Salesforce do? Will they look to build? Will they look to acquire? Will they look to maybe merge with a large financial services player? And how they're thinking about their strategy. And that's one of the, I guess, most exciting part of the coming years.
And what about the social platforms like the Facebooks?
Yeah, the Facebooks, Facebook Libra is effectively a fund, right? It's a money market fund, and it's very much similar to the money market fund that some of the Chinese players have had. So they're interested. I think the fact that Facebook announced Libra is an example of, I think, the pace moving forward for these companies to try and meaningfully engage in financial services. They've always been active. You look at Google at several projects over the year with more or less success. Amazon is in its way part of becoming a big financial services players, but it's very early on. So we'll see more and more of those engage. And the last piece is probably consolidation among the emerging fintech players. Some are growing large customer sets, some are growing different ways to monetize those customers. And you can see a path where aggregating them into larger and larger companies makes a lot of sense.
Jan, it's been great talking to you today. Thanks for joining us on the Tearsheet Podcast.
Thank you. Thanks for having me.